As a global investor, where emerging markets over the last 3 years haven't really delivered any returns, if you have to speak, and you obviously know what constituents India in the emerging market, it's been marginal. How do they need to look at India differently from a single country allocation? What do they need to look at? Because the same parameters which are valid for some of the global markets seem to be a little different when it comes to India. So I think your thoughts would be very important there.
If you recollect over a period of last 10 years or so, whenever we had conversation as well as with many of the investors, I've always mentioned that at some stage India will emerge as an independent asset class of its own and not bundled up together with some Asia, ex-Asia, ex-Japan, Asia-Pac, or some EM kind of a concoction, or some kind of a jumbled up terminology like BRICS and all of that. There are three important ideas behind that. There is a size and scale that India possesses, which is unrivaled by many others. B, that size and scale is going to get bigger by a margin. And C, very importantly, it is a scale of capital efficiency. Let me draw a picture of comparison, and let me take the three biggest markets of the world, America, China, and India. And let me put some comparison metrics of GDP growth rate and the stock market returns in dollar terms in these three markets. I did a comparison some time back, but numbers would be more or less similar band and not very different. If you look at nominal GDP growth rate in dollar terms for America over 30 years, 4%, little less than 4%. China, incredible, 13.5%. India, relatively more modest at about 8.5%. Look at the stock market returns. America, 4% GDP growth rate, producing almost about 9.5% dollar returns over a 30-year period. For 1 unit of growth in America, it produced 2.5 units of returns, or 5% per annum compounded extra over a 30-year period. China, but before I come to China, let me put India. 8.5% growth for India over this 30-year period, nominal GDP dollar growth rate, and about similar kind of market returns in dollar terms, about 8.5% again, like for like, no premium like America. China, 13.5% GDP growth rate, unprecedented, unlikely that anywhere in the future similar growth rate would occur in any other country for a 30-year period kind of number, because it is huge on a 30-year time frame. The market returns in China, and that's where the rub comes by, less than 1%. That 1% is not accidental. 12% discount on the growth, 0% premium but no discount on India, and 5% premium on America's growth. None of these are accidental, happenstances, or chances. It is because markets are ruthless arbiters of underlying reality over a long run. And therefore, the quality premium that America commanded, the die-hard capitalist system, and more importantly, very efficient capital allocator as a country, has resulted in what America has achieved over this time frame. China, phenomenal growth rate, but at a cost of huge amount of damage to the balance sheet of the country, as well as at very inferior capital efficiency. India did not grow as much as the potential demands of India so far, but at least Indian businesses produce decent capital efficiency while preserving balance sheet during tough time in terms of the policy making within country. On all those scores, India has actually improved by miles today. And that is why I think the growth rate of India will be superior than its past. Capital efficiency is leaps ahead of what it has represented so far, and balance sheets have never been healthier than what they are today. And therefore, even though making this kind of predictions is something I'm very, very conscious about, that forecasting is a mug's game, and making those long-term forecasts is even a bigger mug's game. But if I have to put my neck out, I would say in the coming decade or more, India in all probability will be number one market in the world in terms of the returns generated, and I suspect by some margin, because I think both on the growth rate it will create a distance compared to others, more durable one, more predictable one, and superior quality, and therefore even on that score it will create a distance. And therefore these emerging market and other conundrum that keeps playing around, finally things are falling in place to give a new reality, a clearer picture.